A very warm welcome to this one-to-one conversation, fireside chat and panel with a number of luminaries from South Africa. My name is Manus Cranny. This is the Bloomberg Roundtable. The man in the hot seat for the next 30 minutes, it is the Finance Minister of South Africa, Tito Mboweni. Welcome to Bloomberg's Political Will Delivers Credibility and Economic Reform is the benchmark of judging South Africa in 2021. So welcome to the discussion. You've had a double downgrade. My question to you is very simple. The public sector wage freeze, do you have enough within government to take the political knock and freeze wages?
Good afternoon, Manus, and good afternoon to everybody else who has joined us in this conversation. I thought that what I should do is to frame the conversation in order to answer all the questions which are coming. And the way in which I want to frame the conversation is as follows. Firstly, that we have had the global pandemic, which has had a huge impact on the global economy. And the global economy is expected to contract by some 4.4%. Mm-hmm. That contraction in the global economy caused by the pandemic, but also things we did not do before the pandemic, has also had an impact on South Africa. And as of today, the forecast of the National Treasury of South Africa is that the economy will contract by some 7.8%. Mm-hmm. But the South African Reserve Bank has a forecast of a contraction of 8%. Inflation remains under control. Public finances are under stress. The revenue shortfall is expected to be around 322 billion rand, meaning, therefore, that we have to adjust our expenditure patterns. And one of the items that we have to consider is what is being paid to public civil servants. Now, the question is the government and the trades union movement willing to come to a compromise which will be consistent with the current economic situation? My answer to the question is, I hope so. And the Minister of the Department of Public Service and Administration is in conversation with the leadership of the trades union movement to make sure that they come to an understanding. But whatever they agree upon cannot break out the sanctity of our fiscal framework that were presented.
With that said, and with that backdrop, Tito, your credibility and the government's credibility is on the line. The whole world is grappling with COVID. And so my question to you, is there the political will to really push this through?
The political will is there from the government side, from the African National Congress, and the African National Congress in conversation with their alliance partners in the trades union movement.
Do you think that the trade union movement to be more amenable to progressing the discussion to somewhere, to meet in the middle?
I hope so, and I pray so, because otherwise we'll be facing the abyss if we do not contain expenditure in the light of these developments I've described. Then we are not serious about running a middle-income country, which requires an understanding of the complexity of the issues. And complex issues require complex solutions, not the lowest common multiplier.
The president says he's confident that you can avoid a debt crisis. How long do you think that you will be afforded before you face potentially a debt crisis?
Well, I'm very concerned about this because on the current trajectory, and if we do not act on an active scenario to contain the debt, but most fundamentally to grow the economy so that we can get more revenue, so that the denominator can be much better, so that the debt to GDP ratio can be contained. So therefore, the structural reform program is absolutely fundamental to our recovery program. And I'm sure Trudy will speak about the economic reconstruction and recovery program later, but that is so fundamental to making things better. We have to avoid a situation where the debt to GDP ratio comes to over 100%. And I mean, that would be a disaster. It means we'll be facing a sovereign debt crisis, which actually will be much worse for South Africa because let me say, the bulk of the government bonds that the government issues in South Africa is held by domestic banks and institutions.
Yes.
In the event of a sovereign debt crisis, it means you are immediately facing a banking crisis. I don't want to be alive when that happens. And I'll do all I can whilst I'm still alive to make sure it doesn't happen.
And I suppose the question for markets, Tito, and you've had some reprieve in the Rand, things didn't run away, but that's a dollar story. Is there an inevitability to avoid that sovereign debt crisis, Minister, that you're going to have to freeze these wages?
And it is not just the wages, it's the overall pattern of government expenditure. Let me just say, for example, I made a proposal during my medium-term budget policy statement that consideration should be given to reducing public representatives' salaries by at least 30%, because we're in a different situation. We can no longer afford to subsidize people.
Will that really happen?
I beg pardon?
Will that really happen, Minister? I pay cut for.
Well, it's a
30%.
consideration is a consideration which I put before the president. It's a consideration which I put before Parliament. If all of the people involved understand the severity of the situation in which we're in, I'm sure they should accept this. A 30% cut in their salaries is nothing compared to the dire circumstances in which we find ourselves. The private sector has already reduced salaries. They've retrenched so many people. Those who have jobs should be grateful that they have jobs, and they should be willing to reduce their compensation in order to deal with the overall budgetary situation. And I'm committed to working with my colleagues to make sure that we achieve this. Anyway, we have to do it. There's no other option.
I was in Joburg and Cape Town last year. I was asking the question of the president, the Eskom debt. I speak to you a year later, it's 484 billion. We've talked and talked and talked. Minister, how and what exactly is the plan to deal with Eskom's debt?
Well, there are a number of issues which are about the Eskom debt. First of all, not all the bonds are redeemable on the same day. Some of them are of long maturities, medium maturities, and so on. So don't look at the number that says maybe about 400 billion or so and think that
484 billion, Minister, 484 billion.
Yeah, so it's not going to fall due tomorrow. It's spread out over a number of years. The key issue is when a particular bond matures, what is going to be done to redeem it? And most of the bonds actually are held by the Public Investment Corporation and the banks and so on. And I think the Eskom Treasury is working on this matter together with the National Treasury of the Republic of South Africa to make sure that you smooth out the bonds as they mature. So it's not going to fall on one day. But the key issue in South Africa is that Eskom must manage their business, they must manage their income stream, their expenditure stream, and then manage their borrowing program. Because all of us need Eskom to be successful and working. And I think that we have a group of very talented youngsters in the treasury offices and so on, who are working on the matter. I'm confident that they will be able to find solutions as and when the bonds mature.
Do you think the Public Investment Corporation has a bigger role to play in smoothing the rollover?
I think so. And the board of directors of the Public Investment Corporation has indicated to me and also to the President of the Republic that they're willing to play a part in this smoothing over process.
Let's move the agenda along. You've lit up Twitter in the past 48 hours, 24 hours, Minister. You said you put it out to nearly 1 million followers. Do we need a national airline? Now you lit up Twitter, Tito. The question, you know, whether the airline, you've just given it a 10 billion rand bailout, Minister. Are you undermining your own credibility and your commitment to fiscal constraint, lighting up Twitter like that?
Well, we have not given a bailout to South African Airways. We have made an allocation of 10.5 billion rand for the Business Rescue Practitioners Plan. Amongst the elements of that plan are the retrenchment packages for staff, the payment of unflown tickets, commitments to the international partners of SAA, and so forth. So it's not a bailout for SAA, but it's part of the restructuring of the airline. But you ask an important question, which I'm also asking. Do countries actually require something that they call a national airline? Or do we need airlines in the market to operate? They don't have to be national, but they can be business enterprises that function. My view is that look at British Airways, look at airlines in Ireland, look at airlines anywhere else. Don't compare us to the Emirates, which is funded by windfall profits from oil companies and so on. Don't look at that. And in South Africa, the market is going to clear. And if that market clears with the participation of a restructured South African Airways, so be it. And if it clears with an Air Link, which actually we own close to about 4% of Air Link, so be it. If the market clears with Fly Safe Air, so be it. But the government has made a decision to support a restructured airline, not the existing one, but the restructured.
Have you had any serious approaches that really could merit serious attention?
I think the Minister of the Department of Public Enterprises is dealing with that, and I'm satisfied that his conversations with potential suitors is going in the right direction.
Can I ask you a much broader question? I read the tweet and I said to myself, you know, ministers of state, they fly kites, Minister. But flying a kite demonstrates something much deeper about intent in terms of caution on bailouts and a tougher stance. Is that really your message, though, on the South African airline debate? Is that really what you meant to tell the country?
My intention is to indicate that we should move towards a new airline that the cabinet has decided upon, and that airline will be owned partly by the government and more broadly by private sector investors. And we should move with speed. Let's get on with it. Let's get on with it. Create a new airline, privately owned, publicly owned, together. Issue the capital structure, the number of shares. Let people subscribe to the shares with subscription agreements, and let's get on with it.
So maybe open up an equity offering to the people of South Africa. That's one of your ideas?
Yes, it is indeed. Most certainly, most certainly.
Let's talk about the growth equation. You've dealt with the debt side. You've dealt with your Twitter account, sir. The president last week...
Are you my follower on Twitter? Do you follow me on Twitter? I'm following you.
Sir, feel very free to retweet me and encourage. I don't have 1 million yet, Minister. Not like you. Minister, let's talk about the growth side. The president is promising to put South Africa back on top. What has to happen, Minister, to deliver that? The currency, one could say, is taking a knock. The credit rating is under pressure. And one could say that capital is leaving the country. How do you turn that story around, Minister?
Fundamentally, economies around the world grow because of gross capital formation.
Yes.
And therefore, the attention of the South African government must be and has to be the mobilization of private enterprise to invest in the economy post-lockdown, in the tourism industry, in the mining industry, in manufacturing, banking and finance, and so on. And that mobilization is happening through the Economic Reconstruction and Recovery Program. But fundamentally, the confidence of private enterprise is key. And the president is on course in generating that confidence. He just held a very successful investment conference last week, during which a number of investment pledges were done. Somebody might say, well, this is a PR exercise. But well, it's both PR and it's also substance, because we have seen a number of the pledges which were done last year.
Okay. Well,
already being implemented.
Let's just break some of that down, because that's a lot to absorb. The targets, I believe, are over R1 trillion over 4 years, 1.2 trillion over 5 years. Minister, is that still a credible target in a post-COVID world, post-COVID world?
Well, I think that's the president's target, and you can ask Trudy to deal with that later, but that's the president's target.
Do you think it's achievable, Minister? Do you think it's achievable?
Well, my job is to continue to engender the confidence which will ensure that the targets are achieved. And we should remain committed to those targets, work as hard as we can to achieve the targets. Even if we just get 800 billion of real investments on the ground, that's more than enough for me.
The target is 3% growth over the next number of years. Again, same question, Minister. Is that realistic, given the implosion of growth globally and indeed in your own country in the very near term?
Our forecast is that in 2021, we'll see a rebound in GDP growth to 3.3%. And 2022, 1.7, 2023, 1.5%, because of the low base. So you'll see a kind of a V-shaped recovery next year. Our job is to ensure that we continue to aim for a higher growth rate, engender sufficient confidence amongst the economic agents, be they producers or consumers, in order to ramp up the growth rate much higher. It has to remain our objective. We are the leadership, and leadership must lead with confidence going forward and must have ambition. And that's what we're doing.
Well, it also needs to have political belly to reform. And therein lies the warning from Fitch, isn't it, Minister? They are concerned about the administration's promises, but lack of delivery. What is the one thing that your administration, along with President Ramaphosa, can do in 2021 to convince the markets and the world that you are really serious about reform?
I think one of the things that I have created in my office is called the Vulindlela unit, Operation Vulindlela. Vulindlela means to open the way, to unlock the blockages, and to get things moving. Now, Vulindlela unit is not about just working with government departments, because the growth is not going to come from government departments. The growth is going to primarily come from gross capital formation by public entities, but by private enterprise. So the Vulindlela unit works together with the presidency and the private sector and other government departments to try and get things moving forward, opening the way. And private enterprise is very important. We must not be oblivious to that fact. And I think if we mobilize private enterprise, we engender sufficient confidence in private enterprise, these things are achievable. Already, green shoots are beginning to show in the economy. In mining and manufacturing, we see growth being, production being ramped up, which is very good, and I'm very happy about this. I just hope that we do not face a second wave of the pandemic.
No, and that V recovery, everybody's trying and hoping that that will take hold, which takes us to the vaccine story. Vaccine and perpetuation of that V is critically important. Will you be pre-ordering a vaccine?
Well, South Africa is in a fortunate position that we have been invited to participate in the consortium that is looking for this vaccine. And already a decision has been made that South Africa is paying 500 million rand to participate in the process of the production of the vaccine so that we can be in the front line of those who can receive the vaccine. The Minister of Health is very happy about it. It's very rare that any minister is happy with the Minister of Finance, but so 500 million rand is in the pocket, is in the consortium. South Africa will be participating as one of the few emerging market countries. We will be in the front line of the recipients of the vaccine when it's found, and I'm very pleased. And so we'll be short of some 4.5 billion rand, which will be put in the new budget process. So yeah, we're on a good wicket, if I might use that expression.
No problem. That'll be English. At home, we play Gaelic football. How much will you? Are you? So you happy with 500 million, Minister? How much are you prepared?
By the way, the 500 million I've just told you is probably the breaking story.
How much are you prepared to give the health minister?
No, we're going to have to give him 4.5 billion. More,
will you top that up? Are you prepared to top that up, Minister?
Yes.
Okay, by how much?
4.5 billion.
Okay. Minister, if you get your hands on the vaccine, and we're seeing multiple vaccines come through, can that materially shift the growth and the debt story for you?
But it has to. It has to. I mean, the healthier the population is, the less the chances of another lockdown. Much better for a healthier population. And, the green shoots I've spoken about will then, start growing and become much more significant. So I'm very confident about it. And as a leadership.
How long do you think it will be before the vaccine is widely available? You'll do frontline first, but how soon do you see it rolling out, Minister?
Well, in the game of rugby, it's called kicking for touch. I kick for touch to the Minister of Health on these matters. Otherwise, I might mess it up.
Minister, I don't think you'll mess anything up. Let's close off on a couple of core issues for the market and confidence. We've touched on growth, we've touched on debt. The World Bank, how are you any closer to securing a loan from the World Bank, Minister?
I think we are edging closer to a common understanding. The World Bank country representative in South Africa has requested a meeting with me to discuss their approach. What I have resisted is any attempt by the World Bank to impose any policy considerations or conditionalities on us. When we approached the IMF for the $4.2 billion loan, they did not impose any conditions on us. The World Bank was trying to impose policy conditions on us, and I won't have any of that. And now they're coming back.
I hear that you're in the scrum and you're pushing back and you're heading for the touchline. So where are you pushing back the most on? What is the single biggest outstanding issue, Minister?
Well, I'm pushing for a very clean try. A very clean try.
What's the biggest issue?
Running as hard as John Alomo was doing, and I'm going for the try. And I will not have any policy. There will be no policy prescriptions for South Africa, and the World Bank now understands that, which is a very good position to be in. It's a beautiful try.
Minister Tito Mboweni, we thank you for your time today on Bloomberg. I think we've both packed a lot in. I look forward to returning to Cape Town and Johannesburg, sir. I look forward to being with you and having a conversation in person with yourself and the President. I wish you well with the World Bank. Rather you than me, sir. And let's see where we go to with the vaccine. I wish you well on the recovery. And Minister, don't forget now, it's at Manus Cranny, and feel free to tweet me at any time, and encourage a few more people to follow me. And you can invite me round for a bit of stew the next time I'm down your part of the world.
Well, more than beef stew, but also pilchards fish. And also I'll sing the full version of Kevin Berry for you. Thank you very much for having me.
Sir, thank you very much for your time today on Bloomberg. We look forward to welcoming you again. Your Excellency.
Thank you very much.
Thank you very much, sir.
Thank you.
Okay, so that is the Minister for Finance talking through the issues, talking through the possibilities, and talking about growth. So who better to perhaps delve a little bit more deeply into the concept of where will growth come in South Africa? My panel, who've been listening in to Tito Mboweni, the Minister of State for Finance, it's Dr. Leila Fourie. She is the CEO of the Johannesburg Stock Exchange. I'm so sorry, Leila. I've been speaking for 30 minutes non-stop. We've got James Formby, CEO of Rand Merchant Bank, John Copillan, CEO of Hoskin Consolidated, and Trudy Makaya. She's got one of the tougher jobs, the economic advisor to the President, Cyril Ramaphosa. Let's bring it to you first of all, Trudy. You were listening to the Minister there. We were talking about growth. When it comes to unlocking the opportunities for growth in South Africa, Trudy, where is that in the reform agenda? Where is the biggest opportunity to deliver growth?
Thank you so much, Manus, and good afternoon, good morning, good evening, given we're all in different parts of the world. Starting with the opportunities, if you look at our economic recovery plan, it really takes a view that there are different things that have to be done to kickstart the South African economy. But some of these things are not new. It's about entrenching some of the themes, the growth themes that we had been working on, and ensuring that we deliver on it. So the Minister of Finance talked about gross fixed capital formation. Investment, very important to the President. The 1.2 trillion target, it still holds. From what we've seen over the past 3 years of investment mobilization, there is appetite, there is interest. If we tally up the pledges that have been made at the investment conferences, you get a nice number, about 773 billion now. The challenge, of course, is that net basis, that while we get new pledges, we're not losing other investments as we go along. So we're working very hard to ensure that we strengthen that investment pipeline. Now, the other interesting thing that the President has said, and an important pillar of the economic recovery plan, is, of course, the infrastructure program. You would have seen South Africa has gazetted some projects, infrastructure projects, that really unlock economic growth. So in ports, in dams, roads, rail, digital infrastructure, these are very important things to really get the economy going. And also importantly, it's not just about government, but also the private sector coming in. So the Minister of Finance is only putting a small pot of money for infrastructure, hoping to unlock multiples of private sector investment. So we're very serious about it, and we're still pursuing that.
Okay, let's just hold that thought, Trudy, because there's a lot to unpack there. I want to go down the road of the infrastructure, as you say, take it to James. James, where are the biggest opportunities in terms of infrastructure and change in South Africa that can unlock and draw global investment into South Africa?
Manus, thank you. I'll actually pick up where Trudy left off, I think. I mean, clearly, and you touched on it with the Minister, the challenges with energy supply. And I think that, there's real opportunity and progress now happening both in terms of the Renewable Energy Program, or REIPP, and the Emergency Power Procurement. And both of these can make a meaningful difference over the coming years. both to deal with a short-term power shortage, but also longer term to transition the economy to renewable energy. And I think there's real opportunity there for a well-structured program. South Africa's program in the first 4 rounds of the renewables have been enormously successful already. And so there's a sound base to work off. I think, telecoms is a huge theme. And it's great to see that the president has now put a deadline of 30 March to auction off additional spectrum. This is really important, both ultimately for the provision of 5G, but also to lower the cost of data in South Africa for both individuals and corporates. And then I think thirdly, to pick up on Trudy's point on port and logistic infrastructure, I think if this can be unlocked properly, and our port costs are much higher than in many countries. If we can modernize port infrastructure and rail infrastructure, I think it'll do a lot of good for the South African economy.
So let's bring that over to you, John, because obviously Leila, don't worry, you've got the access to the capital. Leila holds the keys to everything. She brings the dollar, she brings the money in the vehicles. But I wanted to bring it to you, John, because we caught up earlier and you actually said to me, man, it's the way forward is through oil, not necessarily renewables, respectfully, James, but through oil and through mining. Just talk me through the biggest opportunity in oil. Just put it in context for me, John, excuse me.
So, I don't mean to sound in any way as I'm arguing against renewables. Renewables are a key piece of the grid that's got to be developed. But, the fact of the matter is our grid is coal-based, and it would be a vast improvement in it if you could move steadily away from that to gas and oil. South Africa did explore the continental shelf around the country decades ago, but at the time, technology wasn't sufficient to look at deep sea opportunities. Over the last, I suppose, decade, the government has made available for exploration purposes deep sea blocks all around the coast. And I would imagine that is an enormous area for growth. When you look at the royalties that governments collect on oil and gas, I would say if you're looking for a solution to debt in South Africa's context, hoping to increase taxes or whatever it is, most unlikely to yield the kinds of results that you could get out of exploiting fossil fuels. The serious drawback is that in 10 years that we've had this on the table, we've had it as part of the SONA address of every president for the last 3-4 years, they still have not managed to get the law which regulates the way in which these rights will be allocated to a point of finality. And that's a big failure. So, these are good opportunities. It's not that government's not trying to go forward with it, but they're very slow in getting the MPRDA to finality, which is disappointing.
Okay, well, we'll bring that back to Trudy in a moment. I want to bring Leila into the conversation. Leila, you and I caught up last week, and we were talking about the Johannesburg Stock Exchange. Part of that narrative was the outflow of capital from South Africa. When I look at your institution, I say to you as the CEO, in your mind, how do we stop the outflow of capital from South Africa?
Manus, I think part of the outflows, certainly on the bond side, may be impossible for us to recoup. In the past, it's taken emerging markets anywhere between 5 and 7 years to recover from junk status. But for us, it's very much dependent on the actions that are taken. There are 2 aspects that will unlock potential inflows. Insofar as policy reform goes. The first is management of the macroeconomic environment, so wage increases and management of the public sector wage bill, together with the commitment to deliver on the fiscal promises that have been made. In addition to that, reform in exchange control is an important aspect to start to engender business confidence. things like accepting dollar-based collateral, things like accepting dollar listings on the exchange. Now, these elements were announced in the National Treasury medium-term budget policy statement by Tito Mboweni, and we need to make that happen. I think on the plus side, the outflows that we've seen, which have doubled last year and again have sustained at the same level, they haven't been negative to a balance of payments, but the long-term outlook on growth is fundamental for the going concern perspective in inflows in the near term.
Leila, just before I move on from you, how optimistic are you that you get those dollar margin products in place? Is it the first half of 2021?
I think it's very difficult for us to make a firm commitment on the timeline. What I can say is that we've been in constant contact with all of our regulators, the conduct regulator, the prudential regulator, and our policymaker, the National Treasury, that there is a genuine commitment and a genuine desire by all three of those regulatory institutions to make sure that we enable change, and that there's obvious interest by the market. If we look at the underweight status of South Africa in the emerging market indices and how that's contracted from around 7%, north of 7% 3 years ago to south of 4%, closer to 3%. In the current instance, in for example, the MSCI Emerging Market Index, there is an urgency and there is a need for a coalition of the both between public and private sector to start to unlock some of these policy changes. There are, of course, infrastructure changes that would be required in order to enable these changes.
So we all listened to, I hope you're all able to listen to Minister Mboweni there. I suppose I did push him, trying to sort of say, you know, where is the compromise on the wage deal? And I asked him about the political will. John, can I bring it back to you? James, can I bring it back to you? You say fiscal credibility is key, but they have very little margin for error. Do you get the sense, listening to Minister Mboweni, that they're prepared to take the political punch?
Honestly, yeah, it was certainly encouraging to hear what the minister had to say. I think he said two very important things. Firstly, consolidating the fiscal trajectory or fiscal debt, and secondly, mobilizing private investment. And, you know, I think time will tell. There are many competing and strong forces at play in South Africa. I think that the government has obviously a lot of sway in tackling those negotiations hard, and they are determined to. I think it's clear that they understand what's at stake here and the importance for the longer term growth, that we don't end up with the nexus of a sovereign and banking debt crisis, which the minister referred to. And that requires, in the next 6 to 12 months, some firm action on that topic. And it's good to see the commitment that he gave.
So, John, let me just bring that back to you. I think when we were chatting earlier, you said to me, Manus, HCI is in essence a mirror image of South Africa, a little bit too much debt. And that's me not being disingenuous to you, but some tough decisions have got to be taken. Do you think there's the political will to reconcile? Do you think the unions have got the will to meet in the middle?
Yeah, so look, you know, both the president and myself come out of the trade union movement. We spent a good 20 years, you know, getting to 1994 and playing some sort of a role. Obviously, mine being far more insignificant than the president's. But I think that what you need to steer a society is a proper social compact. And I think that having people with sensitivity to the needs and interests of a trade union movement is a fundamentally important thing to arrive at that compact. And, you know, when you look at what does government spend money on, enormous amounts of money are spent on social welfare issues. And in a society where you have more unemployed people than employed, that is an unavoidable. That's not just a matter of saying let's squeeze everybody's pensions from 1,000 Rand a month to 500 Rand a month. These are very, very deep and difficult problems to solve. In my own mind, while I'm sure there is a willingness and a political will to contain costs to a sensible level, really the future of digging one's way out of debt, both for our company and for the country, is centered in growth policies. And, I think that, if there's any contribution I could make to the panel, it's just to introduce some skepticism in relation to the willingness of government to commit to growth. If you take, for example, the point that James raised about lowering the costs of access to the internet and so on, these are absolutely fundamental to the future of the country. But when you look at...
Why do you think that they lack the commitment to growth? Give me an example. Give our audience an example of where that comes alive at HCI.
So look, the 5G area of communications is a fantastic area. This thing started in about 2006 with United Nations bodies that are responsible for allocating spectrum, reaching agreement with the then Minister of Communication that South Africa would set aside what is currently the analog television spectrum for the use of mobile data. They do this around about 2015. Here we are in 2020. And we have a state policy that is committed to slowly rolling out what they call DTT. It's a terrestrial digital system, very antiquated, very limited bandwidth, 5 years late. They've so far rolled out about 500,000 boxes out of 14, 15 million television homes. I say that is a complete non-starter. And when you look at where it should go to satellite. It should not go to an old system that in time will itself be phased out. So these are disappointing things.
Those are the disappointments. Let's bring it to the economic advisor to the president, Trudy. We talk a great deal about reform. I'm speaking to Minister Mbowene about that. When you listen to John saying there, we're not moving fast enough in the spectrum space, et cetera, in technology space, what do you say to that? What is the pace of reform and where is it most demonstrable to the world?
Thank you, Manus. I suppose the one thing you can't accuse us is being good at PR. we tell it like it is. So indeed, we get lots of unvarnished criticism and feedback that informs a lot of the momentum that the president wants to have. So he himself has said that, the pace of reform has been slow and it will be accelerated. I like what the previous speaker said about social compact, what John said about social compact, because I think that is often seen as a hindrance, but it actually takes us forward. So I'll give you an example. Ahead of the economic recovery plan, we had very thorough discussions at NEDLEC, which is our convening body where labor gets together with business, civil society, and government to thresh it out. And so we came with a common understanding of what are the priority structural reforms that we're going to pursue. We didn't agree on everything, but we had a clear core set of priorities that we're going to pull forward. And so you have a whole of society approach where even though we don't toot our horn, even when we should, we're all behind it and we're all pushing for it. If you look at the spectrum issue, indeed it took a bit of time, but now it's moving. ICASA, our telecoms regulator, is very much exercised with that process of sounding out the market, laying out the rules for issuing spectrum. Communications department, for their part, are working on digital migration. So it's true, it's taken long, but there is movement and there's clear commitment. I think the president has also made it clear that it's all about implementation. And that is what he's going to judge his team in cabinet on. And if certain things don't happen, I think he's made it very clear that heads will roll. There will be consequences. So we hear the message, and I think you can see already movement on key areas like energy, like infrastructure, like telecoms.
So let's shift the agenda slightly. I was asking the minister, where does growth come from? We're in a heading towards a new administration in the United States of America under Joe Biden. On the front page of his website, it is about climate, it is about impact, and it is about that whole dynamic. I want to bring this to you, Leila, because this is about access to capital and bringing new, fresh capital to emerging markets, to places like South Africa, social impact bonds. You know, you've got to come up with new instruments beyond pure equity to bring capital into South Africa to complement Minister Mbweni and President Ramaphosa. Where do social impact bonds, are they going to be a growing phenomena in South Africa? Are they part of the solution? Leila.
Manus, JSE and South Africa are leaders in the emerging markets in sustainable development. And we not only have the dubious honor of having the highest Gini coefficient, we are also facing into an energy crisis, and our energy producer uses 90% or in excess of 80% of its energy production is coal generated. So we have enormous need on both the social and the climate side. We recently introduced social and sustainability bonds. We've had excellent uptake in the green bond space, and we have really good interest showing in both the social and sustainability areas. So water projects, education projects, and particularly engaging with, for example, the energy producer on green energy production. We have seen over the past 3 years an outperformance in our social responsibility index when you compare it to our headline indices. And so investors are voting with their feet. There is a high interest in sustainability products. We have one of the sunniest countries in the world. We have an enormous wind production capacity. And I think what Boris Johnson in his 10-point plan recently announced in the form of quadrupling wind turbines and creating 250,000 jobs is most definitely a vital and very important unlocking growth node for South Africa.
James, have you got the appetite for, are you seeing an appetite for capital for green and social impact investing?
Absolutely. I think this is a theme, that we've seen both internationally and in South Africa. And I think that there's a great opportunity in some of these themes, and energy is but one that Leila mentioned, where the country can attract capital from a range of sources, both socially responsible investors and DFIs, and obviously financial institutions to really create and structure transactions that don't put a burden on the state in terms of providing this infrastructure. And I think that is important given what the minister highlighted. So we actively looking to how to design these instruments and how to market them to clients, because I think that there is a very long-term future in this theme.
So can I take this over to you, John, because I've done sort of 4 or 5 panels now in the past couple of months, and we're talking about social impact and green revolution and green investing. But if I bring it to an entrepreneur in HCI, you would say to me, Manus, I'm trying still to get ahead with things in mining in Limpopo. So you're dealing with some slightly more traditional modes of mining. How does that square away for you? Are we all talking green too soon? And the reality is fossil fuels, etc., are not going anywhere. They're not over.
Well, maybe I should say this. I think that the thing that President Ramaphosa has brought to the country, which is the most encouraging part of his presidency, is that instead of getting very caught up in what does the country have to do to correct mistakes it made in the past and so on, he's just starting with the question of who is it that would like to invest in South Africa? And, instead of trying to persuade people who don't want to invest here as to how could we change so that we make our country more acceptable to them, they just start with the people who do want to invest here. And our company is one such company. It's a company of shareholders and managers that live in South Africa, love South Africa, would like to see it grow. And whether it's the best country in the world or not, this is our home. And this is where we would like to invest. So I think that the investment conference and so on is exactly the right style of just asking people who are interested in investing to do so. When you then come to the question of, well, what are you going to invest in? It doesn't really matter. It all comes to capital accumulation, new jobs, and new hope for people here. In our case, we've had the good fortune to wind up with a prospect that is an absolutely world-class palladium prospect. It's a mine that should have a 50 to 100-year life going forward. And I would say that it is absolutely central to our company that we develop that. It will provide probably 2,000 jobs in an area that has virtually no jobs at present. And it will be an earner of foreign exchange because it's palladium and platinum are its main items, its main ore body. And I think that, you know, it doesn't mean that that's the best thing. Everybody must invest in that. That's what we've chosen to do. But to encourage people to do things that they're trying to and get on with it and facilitate it, that's the key for South Africa's growth and its future.
Okay, ladies and gentlemen, we have about 5.5 minutes left. So we're going to do something which most panelists probably dislike intensely, which is we're going to go for very short answers. And I'm going to pack a few questions from the audience in. So that's why I'm asking for short answers. Trudy, this question's for you. African Continental Free Trade Area, will it be a game changer for South Africa? In a minute, and I will stop you and move it along in a minute. Go, Trudy.
Absolutely a game changer. We'll have a much broader market. When we invite people to invest in South Africa, they're not doing it for 50 million people. They're doing it for a continent of 53 countries, a market that will be up, over $3 trillion in about 10 years' time. So it's a game changer. We're working on finalizing the rules and also making investments in efficiency, ports, railways, logistics across the continent will make it happen. And so we're also inviting people who have that view to invest along that theme.
Leila, game changer?
Absolutely, most definitely. It will allow countries to beneficiate across the value chain, and it will unlock those border backlogs that we have in between countries, and especially as you move into the sort of central part of Africa where engagement and transport across the value chain can certainly be patchy and problematic.
Okay. I'm going to shift gears. Gentlemen, you don't get the same question. I'm packing another few questions in. Sorry to shift gears. A potential sovereign debt crisis in other parts of Africa. Has that got potential risk to knock on South Africa? Why not? Let's take it to the banker. Why not? James.
Thanks, Manus. I presume that's a reference to the problems that are being experienced by Zambia right at the moment. I think it's important that investors differentiate between the different economies. These are really on very different paths. The underlying drivers are different. And so, a debt crisis in Zambia has no bearing on countries. There's obviously maybe a trade impact, but it's very small in the scheme of things. So really wouldn't have a bearing, for example, on other countries like South Africa or Kenya, for example. No bearing.
John, very briefly for you, and any thoughts on that situation and the risks?
I got lost somewhere. The line cut out, so I didn't hear the question.
No problem. Well, you know what? We'll take it back to you. Free trade agreement that Trudy was extolling. You mentioned the word hub. How important is the free trade agreement for Africa in your mind, creating the hub scenario? In a minute, sir. Go.
I think that the free trade agreement is absolutely a fantastic idea. A number of countries and a number of companies have tried to break into different African areas as an activity, and with mixed results. But I think that the closer you make Africa and the more you cut down the trade barriers, the bigger South Africa, the more central South Africa will become in the hub of Africa, we are at the end of the day something like 40% of the whole sub-Saharan African continent's economy. So there must be a very central place for us in that.
I'm going to give one of the closing comments to Trudy. You are the advisor to the president. When you and the president talk to private investors globally, what is the biggest issue that they raise for you and the president in the privacy? Break the taboo. What's the biggest?
At speed of reform, speed of implementation. They want to see things moving. They believe in the country, the enduring comparative advantages that we have, great people, great logistics, amazing banking sector. So they see all that, but they ask questions about, some of the questions that have been raised here, and we assure them that is in hand, that cabinet is getting moving. We've seen in the past few months what can happen in a crisis when minds are focused. So we will get it done, and I think we will exceed some of the targets. The growth estimates that Minister Mboweni gave, I think we are well geared to exceed that.
I'm going to be very cheeky. James, you have about 40 seconds. Skilled immigrants, it's important for you. Why? In 30 seconds.
Thanks, Manus. South Africa has lost skills. I mean, we're talking of an infrastructure-led recovery, for example, but our construction sector has wilted over the last 10 years, for example. We've lost engineers, we've lost medics, and it's critical that the country can attract and retain specialist skills. And we need to relax rules, immigration rules, so that we can bring people in to replace some of the skills that have been lost over the last 5 to 10 years.
You can come back again. You did that in 25 seconds. Team South Africa, thank you very much. I like it when guests are well behaved. Team South Africa, thank you so much for being with me. Thank you for giving me the honor of moderating this and joining your finance minister today. It is a privilege, and we shouldn't underestimate the access that government give us here at Bloomberg to talk to the world on finance and investing. Dr. Leila Fourie, CEO of Johannesburg Stock Exchange. James Formby, CEO of Rand Merchant Bank. I think is John there or is he gone? He may be hidden somewhere in the mosaic of Team South Africa. If you're there, John, and can hear us, John Copeland, Hoskin Consolidated, and economic advisor to President Cyril Ramaphosa, Trudy Makaya. Ladies and gentlemen, I thank you for your time, and Trudy, say thank you to the minister. I hope all is well in Twitter land. From Dubai, Bloomberg, and the global audience, good afternoon, good morning, good evening.
And that's it for this, our first day of Bloomberg Invest Africa. A big thank you to all of you for joining us. We'd love to hear from you, so please join us on social media. Remember, our hashtag is #BloombergInvest. But we're not done yet. We're convening a roundtable tomorrow, November 25th, called Powering Africa's Recovery. It's at 1 p.m. Central Africa time, so do join us back here to view that discussion. I'm Malika Kapoor. Thank you once again for joining us. Stay safe, and thank you for being with us.